Bitcoin is more than just a digital currency. It represents a fundamental shift in how we perceive and interact with money. Unlike traditional currencies controlled by governments and financial institutions, Bitcoin operates on a decentralized network. This decentralization is the key to its transformative potential, challenging the established global order. Bitcoin empowers individuals by giving them direct control over their finances. It transcends geographical boundaries, enabling seamless and low-cost transactions across the globe. This has profound implications for international trade, remittances, and financial inclusion, potentially reducing reliance on traditional banking systems. However, Bitcoin's disruptive nature goes beyond its technological capabilities. It challenges the very foundation of the existing power structures. By offering an alternative to the dominance of the US dollar and institutions like the IMF, Bitcoin paves the way for a more equitable and multipolar world. Since World War II, the US dollar has reigned supreme as the world's reserve currency. This privileged status grants the United States significant economic and geopolitical leverage. Countries worldwide hold substantial dollar reserves, effectively tying their economies to the performance of the US dollar. This dominance allows the US to influence global trade, dictate financial policies, and even impose economic sanctions. The ability to print the world's reserve currency provides the US with an undeniable advantage, but it also creates vulnerabilities for other nations subject to its monetary policies. However, this unipolar system is not without its critics. Emerging economies increasingly voice concerns about the dollar's hegemony and its potential for manipulation. Bitcoin, with its decentralized nature, offers a potential escape from this dependence on a single national currency. The International Monetary Fund, or IMF, plays a crucial role in maintaining the existing global financial order. Established in the aftermath of World War II, the IMF aims to promote global monetary cooperation and financial stability. However, critics argue that the IMF often acts as an enforcer of the US-led financial system. The IMF's lending practices, often conditional on structural adjustments and austerity measures, have been accused of exacerbating economic hardship in developing countries. Additionally, the IMF's governance structure, with voting power tied to economic contributions, gives disproportionate influence to wealthy nations like the United States. Bitcoin's emergence challenges the IMF's authority by offering an alternative system for international finance. Its decentralized nature and lack of reliance on intermediaries undermine the IMF's role as a lender of last resort and a mediator in global financial crises. To understand the potential impact of Bitcoin on the established order, it's essential to examine historical precedents. Executive Order 6102, signed by President Franklin D. Roosevelt in 1933, provides a stark illustration of how governments can react to threats against their monetary control. During the Great Depression, the US government, facing economic turmoil, issued Executive Order 6102, which effectively confiscated private gold holdings. Citizens were forced to sell their gold to the Federal Reserve at a fixed price, a move that many viewed as a blatant seizure of wealth. While the historical context differs significantly, the parallels to Bitcoin are undeniable. Bitcoin, like gold in the past, represents an alternative to fiat currency and a potential threat to the government's control over the monetary system. Executive Order 6102 serves as a reminder of the lengths to which governments might go to maintain their dominance. By 2025, Bitcoin has witnessed an explosion in adoption and value, driven by a confluence of factors. Global economic instability, fueled by inflation, geopolitical tensions, and the lingering effects of the COVID-19 pandemic, has pushed individuals and institutions to seek alternative assets. Bitcoin, with its limited supply and decentralized nature, has emerged as a viable hedge against economic uncertainty. Institutional adoption has also played a pivotal role in Bitcoin's rise. Major corporations, hedge funds, and even some governments have added Bitcoin to their balance sheets, recognizing its potential as a store of value and a strategic asset. Advancements in technology have made Bitcoin more accessible and user-friendly. The development of Lightning networks and other scaling solutions has addressed concerns about transaction speed and fees, making Bitcoin a more practical option for everyday transactions. Bitcoin's growing acceptance, particularly in emerging markets, directly challenges the IMF's influence. As more individuals and businesses bypass traditional financial institutions and rely on Bitcoin for cross-border transactions, the IMF's role as a mediator and lender becomes less critical. Furthermore, Bitcoin's fixed supply and decentralized nature offer a compelling alternative to nations struggling with hyperinflation or currency manipulation. By adopting Bitcoin, these countries can potentially break free from the shackles of IMF loans and austerity measures. This shift in financial power dynamics is unlikely to go unnoticed by the IMF and its powerful stakeholders. The IMF may attempt to adapt by incorporating digital currencies into its existing framework, but its ability to maintain control in a decentralized financial world remains uncertain. As Bitcoin's adoption continues its parabolic trajectory, governments worldwide are grappling with its implications. While some may embrace the potential for innovation and economic growth, others may view Bitcoin as a threat to their monetary sovereignty and control. We can expect a range of reactions, from attempts to regulate and control Bitcoin to outright bans. Governments may impose capital controls, restrict trading, or even try to stifle the technology through misinformation campaigns and legal challenges. However, completely eradicating Bitcoin will be a monumental, if not impossible, task. Its decentralized nature makes it resilient to censorship and control. Any attempts to suppress Bitcoin may only serve to further highlight its value proposition as a censorship-resistant and borderless form of money. Navigating this uncertain landscape requires a strategic approach. For individuals seeking to protect their wealth and capitalize on Bitcoin's potential, accumulating a position of strength is paramount. This involves acquiring Bitcoin gradually and securely, focusing on self-custody and understanding the importance of private key management. Diversifying holdings and exploring alternative asset classes can further mitigate risks associated with government overreach. Precious metals, foreign currencies, and decentralized finance protocols offer additional avenues for preserving wealth outside the traditional financial system. Furthermore, engaging in education and advocacy is crucial. By understanding the technical underpinnings of Bitcoin and its potential societal impact, individuals can contribute to a more informed and nuanced public discourse. Regardless of the path governments choose, Bitcoin has fundamentally altered the financial landscape. Its emergence has sparked a global conversation about the nature of money, the role of government, and the future of finance. Whether Bitcoin ultimately replaces existing currencies or coexists alongside them, its legacy as a catalyst for change is undeniable. It has empowered individuals, challenged institutions, and forced us to rethink the very foundations of the global financial system. As we navigate the uncharted waters of the 21st century, Bitcoin stands as a testament to the power of innovation and the enduring human desire for financial freedom. Its story is far from over, and its ultimate impact on the world remains to be written.